Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Thursday, June the 6th, D-Day. The year's 2019. Let's talk trading. What is your plan? First off, yeah, this video's going out late. Sometimes things come up and I have to put trading off to the side. So that's why this video isn't coming out till tonight. And I guess technically, depending on where you are in the world, it's Friday. But I had a email from a trader that says, how do you make a trading plan? So I think possibly for the rest of the month, we'll go over various aspects about trading plans. Now, you probably know what's something that's really important about your trading plan. Well, it would be risk and money management. That's a key to your trading plan. And of course, the method that you're using. If you're just starting out, then you pick one method. You don't try to juggle many methods. And there's a few other things. What are you going to trade? What market? When are you going to trade? You're going to trade by session, the open. Are you going to avoid the open? Are you only going to trade the open? Are you going to trade more than once? Are you going to trade for an hour, 3 hours, all day long, all night long? I mean, there's so many things, but you write things down. And then basically what you're going to do is you're going to repeat these things every day because that's your plan. So you repeat them. And then if things work, if you have a little success, it's going to build your confidence. And then as you do it, you're going to become more competent. So, I mean, that's like the overview of trading plan. But, if you don't have this part of your trading plan down, the risk and money management, this screen that I put up, I've been putting up for what, months, years. I don't even know how many times I've shown this screen, but it's that important. It needs to be burned into your brain. So every time you take a trade, you've got your risk management in place and you pretty much have your money management in place. If it goes to a certain level, it's time to start taking off profit. Either you take all the profit or maybe you take just a little bit and you leave some to ride. And you move your break even or your stop loss up to break even +1. So now you've got quote unquote a free trade. But you do that. You don't willy-nilly it. You don't airball it. You don't have a gut feeling. No, you have something that you're going to do over and over and over again. So, for example, buy zone. Do this over and over and over again. You can see here we got a pivot point to the downside. So our bias is down. The week was up. I believe we're up for the week. You see we're above that weekly open. So we've got a bias to the long side based on the weekly open, bias to the short side on the pivot point. Now, if you're not using the pivot point, it'd be a long bias. If you're not using the weekly open, it'd be a short bias. So you can have as many different things as you want as your bias. But you don't want to have 20 million because that's, how can you ever make a decision? So maybe one, maybe two, maybe three. And this is just one trading method here, the buy zone. Price has to move away from the daily open. It just has to. That's the range. And it does on a daily basis. We see that every day. Right now, and we can actually, if you look at yesterday's, this is yesterday's candle. You see it broke out the top and broke out the low. So either way, you had an opportunity. What was nice is I believe it broke out the low first. Then it came through this wick zone. So you could grab going out of the lower wick zone. And you can see this is almost a doji indicating indecision. And then you see what happened next. And looking right now from when I just brought up this portfolio, you can see prices down. And once again, we talked about the range. Current range is 21. You can see here we've only had 2 ranges under 30 over the last 100 days. So, looking at the H1 chart here, you can see we had some big candles here. right now. Got an inside bar right there. You can see it. Look at a little breakout there. And this is where we're sitting right now. From a price action standpoint, you see the big 3 ball down here, pro trade, a lot of movement, 3 ball at the top, red at the line, short. Once again, I mean, price most likely is not going to stay between 30 and 20. It's just not. So if it comes up here, you go long. If it hits here, you go short. It's that simple. Maybe you get a little bit of pips, maybe you don't. But you have to have a plan. And I talked about the money management. You can look at my exit playbook videos. And for those of you who were asking about the wick zone over on my Facebook page, all you do is go to my channel there on YouTube, and you can search for wick zone, buy zone, rat zone. And I actually believe on the channel, I think I might on the not on the channel, but on the Facebook page, I think I might have actually uploaded the indicator TROHL5, just so people wouldn't have to go over to the forum where I post all my code. But all you do is look down in the comments down here, and you can see links to where I post my code and the Facebook page and all that kind of stuff. But one thing to note, tomorrow is NFP, non-farm payroll. The last one was so anemic, it's almost not even worth mentioning. Maybe tomorrow we'll see a little more action, a little more price movement. I think that would be nice. Okay, where was I here? Coming back here, just looking at the hourly chart, you can see here through the Australian New Zealand session, through the Tokyo session, we just don't have that much movement at the time. You can see here from the ranges. But on the daily, right here, you can see this is the upper wick zone. It failed to jump out of it. So you might want to consider going short if price gets below the daily open. This price needs the range. Well, let's see. Might want to switch this over. Just look at the weekly for a second. You can see the weekly range 161 here. It's moving back up. I mean, this talk about a nice wick zone trade right here out of that lower weekly wick zone. Nice move to the upside. In fact, there's one trader posting over on the Facebook group. He is slaughtering with the wick zone. I don't think he'll probably ever change. He's just taking massive pips. He's posting charts. Once again, something real simple. You look at the previous days high, the low, the candle top, the candle bottom, and on the HL5 indicator, it'll do that. Let's see. HL5 here, yeah, we can turn this on. Oh, actually, it already is on, but we can change it up here. We can show the high, show the low, and then show top bottom set to true. Okay. And you need to probably have one of the most current versions, otherwise you won't have the show top bottom. And let's see, we want to look at, we'll take whatever periods on the chart, but let's just use 1 bar, and we're going to use 1 bar ago. So let's switch this over to the day. And so see right here, here's the upper wick zone, here's the lower wick zone. Switch it to the week. There's the lower wick zone, and there's the upper. And of course, you can change these colors too if you want to make them match. But that's it. It's not hard. I mean, you don't even need the indicator. You can just put on whatever chart, and you can just drop horizontal lines at these 4 spots. Indicator just saves you the trouble. And then, of course, if you want, when you're using this, let's say you want to trade the daily wick zone. So you just set my period to the week, and then it won't matter if you switch to the day, you'll have that wick zone. Okay, you can even switch it to the hour, and then you still have that wick zone showing on your screen. So, it's simple. You don't have to use the donational wick zone indicator. You can use the TROHL5. And in fact, now that I think about it, actually TROHL5 has one advantage, because back in 2014 when I wrote the wick zone indicator, I didn't put the distance, the prices from these levels. So this is pretty simple. So if this is your trading plan, you go, okay, when price gets in between here, I'm going to trade long here and short here. Now, if I go short here and price reverses, maybe I set my stop loss at right, 1 pip above it. So if I'm going short and price reverses, and then of course right there you're talking about 29 pip range. So you're going to set your position size so you don't exceed your risk. So maybe it's going to be, if you're usually trading, say, a mini lot, maybe it's only half a mini lot on this particular trade. Whereas down here, if price enters this zone and then wants to leave, you can see you'll have a 14 pip difference. Actually, yeah, you got a 14 pip difference. And so you might put on your full mini lot. But, that's up for you to decide. And you can see here, looking at the hourly chart with the weekly wick zone, you can see that movement. So I hope that helps give you an idea about trading plans and about the, like in the wick zone or the buy zone in particular, how you can do this. So if you have any more questions, go ahead and ask. Feel free, don't be shy, and I'll see if I can help you out with an answer here. Like I said, I think tomorrow we'll be talking about NFP, but maybe starting next week sometime. Actually, next week's going to be a busy week for me, so I'll try and get the videos out in the morning, but there might be a morning or two where it doesn't happen. So, fellow traders, I hope you had a profitable day, and so far I hope the week's been profitable, and we'll catch you tomorrow at NFP. And just remember, it's not what you trade, it's how you trade it. So get out there and drain the bank.